Taking charge again on Wall Street. Let's ask our Bulls and Bears panel. Mike Norman, Scott Blyer, Pat Powell, and Peter Schiff joins us as well. Scott, a couple of days ago, I'm going to give you a little credit. A couple of days ago, you said it's over. The bull market is about to come back. Now, you were the one who was saying that the bear market was coming about 6 months ago. I hate to give you too much credit, but you seem to be right on.
Today was a very, very, very important day. The most important day of the year. You know, I've been bearish for a long time.
It's a short year so far.
Absolutely, and it's been an action-packed year. We've packed a year's worth of business in 3 weeks. But the fact is, what you saw over the past couple of days was a worldwide margin call on hedge funds. That's what you saw. And today, you had Google down $50. The final bubble was burst. And that's what you saw today. Now, the Fed cut rates. That's great. We've been buying small caps, some financials, some mortgage companies because they were so cheap and not going out of business. We're rewarded today, but I do think that the bear market is over for now for the next 6 months.
Okay, Peter Schiff, you feel the bear market is not over, do you?
No, I mean, it's just getting started here. Although we've been in an ongoing bear market, as I said, since the peak in 2000, priced in gold, the Dow is down by 70%. The NASDAQ is down much worse than that. So Americans have been losing a lot of wealth in the U.S. markets. But, as far as the nominal declines, I think we still have a long way to go in nominal declines, particularly in the NASDAQ. And, I don't think you're going to get an end to a bear market with this kind of spectacular fanfare that's obvious to everybody. I think eventually the bear market will end, but it's not going to end with a bang. It'll be a whimper, it'll be a long, drawn-out affair.
You're a perma-bear. You'd be bearish. You would be bearish if the Dow was 5,000 or
let's
15,000.
give the lady a chance here. Pat Powell, for goodness sakes, we shouldn't kick a bear, at least a bull day down, should we?
I'm just always reminded that even a broken clock is right twice a day.
So which is that for me or is that for
I'll leave that up to you. I'm actually coming somewhere in the middle of these two. I think the short covering is absolutely right. I think what we had to see is the financials turn around, and we saw that. And we saw that yesterday, though, too. You could actually see a glimmer yesterday and I don't think that this market can really move forward without the financials. So, got to keep an eye on it. You're absolutely right. 2 days does not a trend make, but 2 days positive in the financials is very encouraging.
I want to quote Brenda Butner, the great Brenda Butner here at Fox. Mike Norman, she said at the last 300 upside day, she said, "I don't believe this day." And we did have subsequent very difficult days after that. Do you believe this day going forward as a trend?
I think the last 300 upside day was in November, and she was right to say it back then because I think we've had some major policy shifts. As I said, if this day happened without what happened yesterday and this sort of coalescing on this idea of a stimulus package, then probably it was a rally in a bear market, and Peter would probably be right. But I think conditions have changed, and not just in terms of policy. When you look at certain things in the economy now, Liz, when you look at mortgage applications, refis, when you look at the yield curve, when you look at bank lending, when you look at issuance of commercial credit, all the things that touched off this crisis late July and August, those things are abating now, but the media and investors are not paying attention to that, and I think this rally is real. I think the volume speaks for itself, and it's going to continue.
Absolutely. But, Scott, should the folks out there keep a little bit of their powder dry before they come back in this market?
Absolutely. The market is wild. You don't get a 600-point swing and have that volatility die in 1 day. But interestingly, technically, forget about the stimulus. The market's old high in the year 2000 was 11,750. What was the low of this entire move? 11,650, and we've bounced hard on a big volume.
Peter Schiff, here's what I don't think has changed or abated, and that is lending situation here. I think the banks are very scared now. They should have been scared enough before to make it a little bit tighter, but now very hard to get a big bank loan at this point.
Lending is going to keep on getting tougher. As the Federal Reserve lowers interest rates, yes, it makes it more attractive to borrow, but it makes it a lot less attractive to lend. Nobody wants to lend. If you look at the mortgage refinancings, the only people who can refinance are the ones that have conforming loans, and that's because Freddie Mac and Fannie Mae will buy them, and they don't care how much money they lose.
I can get a jumbo loan right now. I can get a jumbo loan right now at below 6%.
You're going to have to have a lot of equity on that house and great credit.
20%. 20% and good and decent credit above 720.
Scott's absolutely right. I've been shopping this. I've been looking at this.
No doubt.
You can, before the Fed cut yesterday, you could get an $800,000 loan
but it's
for
not these fairy tale deals where you didn't put any money down.
Oh, no.
5% down.
20%
This is
down,
going back to the old days.
20% down, good credit.
Yeah. Okay.
Yeah, the average American doesn't have 20% to put down. They can't, and a lot of people right now that have homes have no equity.
Well,
so they
there
can't
is still a
refinance
lot of
without
cash
equity.
out there, but